Hi, Tony here. US equities finished mixed on Friday as investors balanced ongoing concerns around AI capex spending against a glimmer of hope for a diplomatic off ramp in the Middle East. Those hopes came from reports on Friday evening that China was trying to revive stalled peace talks between Washington and Tehran. Over the weekend, we then saw the notable absence of US strikes on Iran after 13 consecutive nights. Iran responded by pausing its retaliatory strikes, and these are the first concrete signs of de escalation since tensions flared earlier this month. This has resulted in crude oil falling by as much as 8% this morning on its reopening, and Nasdaq futures jumping by 450 points, or about 1.6%, before trimming a good chunk of those gains. All of this sets up for a huge week ahead with earnings from mega tech companies Microsoft, Meta, Apple, and Amazon, while Thursday's FOMC meeting is shaping up as one of the more interesting in recent memory. Let's take a look at the charts of the Nasdaq and Dow Jones to see how they are lining up at the start of this new week. All right, to recap, this is the rally from the March lows, which took the Nasdaq up about 35% into this high here in late March, early June, from which we then saw a correction commence. Now, this whole price action through here has been very choppy, very corrective. It doesn't look like anything else other than a correction at this point of time. And on Friday night, you saw it come back into and test the band of support we've been talking around 28,000. It's wave equality level, and it's also the bottom of this trend channel support. Now, what we're watching for here is signs of basing, and there was some tentative signs here. We're probably going to see futures, presuming they hold these gains, open around here when the floor session opens tonight. So we're looking for signs of basing in this area here, and we're going to get some tentative signs of that this evening, I suspect. Really, to confirm that a base is in place, it probably would take a really nice punchy reversal candle down through here and back higher, or a break above these highs we saw last week coming in around 20,900. And then that would give us the green light to A, test the top of this trend channel resistance, and B, this record high before a push up towards 32,000. Now, of course, if the Nasdaq fails to hold this support area around 28,000, 27,800, then you're probably looking for a deeper decline back towards this 200-day moving average coming in at 26,400-ish. Looking at the Dow Jones has been followed a very similar pattern. We saw the rally from the March lows, pushed up to this high here in early June, a little pullback into the psychological support area around 50,000 before the uptrend resumed, taking it up towards this high in early July. Now, we've been talking about this pullback in the Dow Jones following a corrective pattern back towards some support coming from this record high over here in early June, this low here at the end of June, somewhere in the 51,600 to 51,300 area. And you can see on Thursday night, it did that quite nicely with a little bounce following on Friday. So what we're looking at here is, providing the Dow Jones holds above this support band, then I think the uptrend will resume with a test of this record high from the 7th of July at 53,294 before a push up towards 54,000. Now, conversely, if for whatever reason we were to see a break below this support band and it then continues, then you're probably looking for a deeper decline back towards this 50,000 psychologically important support level. That's all from me. Stay tuned for another update later this week.